Thank you for joining us on this Blockchain Co-Investors webinar. It's the end of the year, and so we're looking ahead to 2020. And in this webinar, we'll cover 10 specific predictions that we have for the coming year that we think will be substantial and meaningful for the world at large, and that which build upon the blockchain technologies that we invest in. For those of you who don't know who Blockchain Co-Investors is, you can find us at blockchaincoinvestors.com. We're the leading blockchain venture fund of funds, and through that we invest in the leading venture capitalists globally in this space. We've already recorded a prior webinar, which you can find at blockchaincoinvestors.com, which covered off our long-term view. 10 blockchain inevitabilities that we believe are going to impact the next 3 to 5 years. However, for the purposes of today's call, we're looking much more short-term, specific predictions for 2020. The first is that we believe that G7 and the EU will announce digital monies in 2020. The issue, of course, is that in 2019, China took the initiative and announced not only that they were developing a digital currency for their nation, but that in addition, they would put blockchain as one of their top technologies for the entire nation to focus on. At the same time as those announcements were occurring, we began to see leading financial leaders in the Western states, such as here Mark Carney of the Bank of England, beginning to talk about why it was critical that the West also embrace crypto and digitally enabled monies. And in fact, Mark Carney was perhaps the first of the leading central bankers to say that a cryptocurrency was not only a good idea, but that it was a needed idea. At the beginning of 2019, we would not have predicted that things could change so quickly. However, today there is no major country in the world that is not looking very seriously at launching their own native digital monies. And specifically, we expect that the EU and some of the EU member states will firmly now move forward with their digital monies. Christine Lagarde, who is the managing director of the IMF in the top right-hand corner, has been very specific about why she thinks this is a good thing for the EU. France has already announced that it is prototyping a French digital money, and Germany is not far behind, with 200 of the top German banks pushing hard for regulation that is now being passed to enable them to offer cryptocurrencies and cryptocurrency custody to their customers. Now, obviously, the G7 is not all about Europe. We also have Canada, Japan, and the US in the G7. We're not sure today what Japan and Canada will announce in 2020, but we feel confident in making a prediction that the US Treasury Secretary, Steve Mnuchin, will rapidly follow up his recent announcement that the Treasury was tracking digital currencies, though didn't feel any specific need to accelerate initiatives in the area. And we think before the end of 2019, the US Treasury will announce that there will be a digital dollar. Now, beyond the G7 and the EU, our second prediction is that developing nations will firmly embrace Bitcoin and in some cases other forms of cryptocurrency. For the developing nations, this is a very different conversation. Whereas the EU and the G7 and China have working currencies, sovereign-backed fiat currencies, most of the world does not. And in the specific examples here on the left-hand side, Venezuela, where you can see the Guardian newspaper of the UK reporting how much paper currency it would take to buy a roll of toilet paper in Venezuela. And on the bottom, one of the largest of the Zimbabwean notes, $100 trillion note issued by the Reserve Bank of Zimbabwe. You can see that it's not without reason that as many as 3 billion people around the world have no confidence in their sovereign issued currencies. This is a substantial issue for them and for their nations, of course, which in many cases are confronted by hyperinflation, currency devaluation, and the like. We expect that Latin America, it will be all about Bitcoin. And in fact, we're already seeing very rapidly growing adoption of Bitcoin in the Latin American nations, Venezuela, Argentina, Brazil, and others. And we think Bitcoin will de facto become the continent-wide currency when people want to ensure that they have a form of digital money that they can rely upon. In Africa, we think that it will be a more nuanced conversation. Despite its lack of technology leadership in many regards, Africa has been a leader in embracing new digital internet technologies, mobile solutions, and of course, new forms of money such as BitPesa. And we see a host of initiatives across the African continent as people begin to try and embrace the notion of sovereignless digital monies. And we expect that there will be a number of initiatives surfacing out of Africa. The third, and perhaps the largest and most important of the developing nations, of course, is India, which in 2019 announced a great deal of hostility towards sovereignless digital monies such as Bitcoin, but at the same time began to talk about the need to complement its biometric identity solution with some form of Indian digital currency. We expect that in 2019, India will reverse itself and that will be more supportive of the world's digital monies and cryptocurrencies, not least as it sees China and the EU and G7 nations beginning to embrace the same. And we expect that India, by the end of 2020, will have announced its own digital money and will probably have removed some of the limitations on Bitcoin and other crypto assets. Our third prediction focuses on global banks and the role that they will play in crypto assets. As their central bankers increasingly embrace digital monies, we expect that the world's leading banks will be under a great deal of pressure to build out the infrastructure to support those digital monies. And at the same time, as their customers, their corporate customers, commercial customers, and individuals begin to demand services and solutions for other crypto monies such as Bitcoin and Ether, so we think the banks will have no choice but to offer crypto access and custody. And on the left-hand side, I think the world's banks are very clear at this point that as crypto users have been increasing and the number of wallets have been increasing, the big banks have been losing out. And indeed, they've opened the door for a host of competitors from Binance to blockchain.com, Coinbase, Kraken, to mention four. The world's biggest banks don't want to lose their customers to emerging mobile-first technology providers. And so without question, banks will need to resolve the issue of their stance via crypto and crypto custody. We've already heard a lot of rumblings at big banks, such as in the States, Bank of America, BNY Mellon, and Citibank, who have announced initiatives but have not fully embraced rolling them out for their customer bases. In Germany, the leading German banks like Deutsche Bank, Commerzbank, and KfW lobbied hard to get new regulations passed at the end of 2019, and we think that they will begin to announce crypto access and crypto custody for their customers. But we think the leaders in this space are likely to be the Swiss banks. We expect that by the first quarter, we will see players such as Vontobel and Merki Baumann, the private bank in Zurich, will have actually rolled out crypto asset solutions and custody solutions for all of the customers that they serve globally. Now, there's an underlying implication of this, and that is that the custody has to be robust. And we think also in 2020, we will begin to see situations where banks will roll out custody solutions for crypto assets only to discover that they're not as secure as they had hoped. And we think that this will swing the pendulum towards the world's leading custodians and companies such as Anchorage and SFOX, who have already stood up institutional grade custody. And we think the demand for those services will skyrocket around the world as customers of the biggest banks ask to have these solutions provided to them. The second implication of the arrival of digital monies, sovereign-backed and distributed, is of course that we need other forms of infrastructures to support those assets too. And on the left-hand side, we're all confronted today by the reality, the issue, that we have to have multiple applications to support our financial affairs. And so on the right-hand side, we might have our main bank, in this case, First Republic. We probably have some payment solutions, in this case, PayPal in the bottom left. We may have our institutional accounts and apps in the middle, such as TD Ameritrade, now acquired by Schwab. And on the right-hand side, we may have a crypto asset app that we use, such as, for example, Coinbase. This fragmentation of our financial affairs and the need for us to be familiar with and working with a number of apps, we believe will start to change as into 2020 we see the global launch of hybrid wallets and apps that enable us to do all of our financial services within a single app. We already know that WeChat on the left has built a lot of this functionality, and Chinese customers gain the benefits of apps that are able to support not just payments, but also allow them to do social loans and take insurance and manage their wealth. And we expect these to be offered globally. Here, this is Global ID that is fast progressing its hybrid integrated financial services wallet. And we think that these solutions in 2020 will also incorporate communications and new forms of identity that the world is much in need of. Asset players, and specifically the largest companies in the world that issue the products that we all invest in, the mutual fund companies, the ETF and index companies, the leaders, have been confronted by the reality that whilst in the last few years they have technology enabled their front offices, and in many cases, such as the TD Ameritrade example on the prior prediction, many of us can now use mobile native applications to access our accounts and to conduct our affairs. Nonetheless, the middle office and back office of many of these institutions is still paper-based. And the experience of the last couple of decades is that as these large asset players begin to apply technology and then streamline and save costs as a result, they've been able to reinvest those cost savings into product performance. And this is, of course, the story of iShares from BlackRock, which is today the world's #1 ETF provider, but which was an early mover in taking cost out of its products to help them generate higher returns for their investors. Our experience historically has always been that the best performing products eventually gather the majority or a large portion of the capital available. And so certainly that was the iShares experience. In 2020, we expect to see the world's largest asset players increasingly applying blockchain to their back offices and to some extent their middle offices. And we think this will be where they first go, driving cost savings as well as greater speed and continuous compliance in a much more efficient and technology-enabled way. And so at the end of 2019, HSBC announced that before the end of the first quarter, they would put upwards of $20 billion of private assets onto a blockchain to make it much easier for their clients to gather information about their investments. We know that here in America, Franklin Templeton has been beginning to look at putting all of its custody onto the blockchain for the products that it provides. And over in Asia, Securitize, where we are investors, has recently announced investments from Nomura, MUFG, and Mitsui Fudosan, as well as Santander of Europe, with the intent being to provide digitization and tokenization of assets, particularly to streamline the back office. So we think that this is not just a prediction about the intent to save money and streamline and improve performance in a more efficient way, but we think it's an actuality, and that in 2020, we will hear an increasing number of big financial institutions, and specifically the asset product creators, embracing blockchain. Our sixth prediction is conversely that we don't expect there to be ETFs approved for Bitcoin, Ether, and other crypto assets in 2020. The SEC has been fairly clear about what it needs to see before it will approve ETFs for people such as Bitwise and VanEck. But we don't see this as a negative for those players, because we think, and this is our prediction for 2020, that those people that have well thought through indexes and funds will nonetheless gather enormous assets in 2020. And we have here two examples: Grayscale, which is part of Digital Currency Group, DCG, based in New York, who offers their products, GBTC and so on. And Bitwise, based in San Francisco, which has its crypto fund index already in the marketplace. And we think that as institutional investors seek to gain exposure to this asset class, and in the absence of ETFs, they will embrace these indexes and funds. In 2020, we conversely expect that pro traders, the most sophisticated traders in the world, will increasingly embrace crypto, and in order to do so, they will embrace sophisticated exchanges. Up until now and through 2019, we've seen the creation of multi-million customer portfolios at companies such as Binance, Blockchain, Coinbase, and Kraken that we referred to earlier. And these companies have made enormous progress. However, for the most part, these are spot exchanges focused on retail customers, crypto enthusiasts who aren't particularly sophisticated about the way that they want to go about trading. Professional traders, on the other hand, always need much more sophisticated offerings. They need to see combined order books, better price discovery. They want trade anonymity so that the exchanges don't know who they are and how large and what direction their trades are taking. And they want to be supported by algorithmic trading techniques, and they need access to better and broader data so that they can actually create their own strategies for trading these assets and the pairings between these assets and the fiat and other assets that they have routinely been trading in the past. So in 2020, we anticipate that the crypto broker dealers and crypto access channels such as Amber and SFOX and Tagomi will gather increasing momentum as the largest traders in the world come online, begin to trade crypto pairings, and expect and use the more sophisticated offerings of these players. Our eighth prediction is a broad prediction, but an important one. When we rolled out the cloud over the last 20 years, it began with a great deal of confusion, and there was a great deal of concern about whether companies and enterprises should embrace public clouds with all of their benefits, but also the concerns that they raised around security and ownership. And it took us perhaps a decade to move from intranets and proprietary internet and storage solutions to the notion of a hybrid cloud, which is today used by most enterprises globally, where they have a relatively sophisticated way to think about the use of networks in their enterprise computing solutions. We think that 2020 will be the year when enterprises finally figure out the complexities to use hybrid blockchains. And whilst to date, the discussion has been more about whether to use the global public open blockchains or whether instead to stand up private blockchains, we think that these, just as they did with the cloud, we think that this will begin to merge into a notion of a hybrid solution in which private networks enable a great deal of the activity to take place, but critical pieces of information will be immutably stored on the public networks. Now, this is not a simple undertaking, but we do think that 2020 will be the year when large enterprises finally crack the issue of creating hybrid blockchains that can meet their needs. Our ninth and penultimate prediction is that we will see more blockchain unicorns emerge in 2020. Back at the end of 2018, the world had 9, and they can be seen on the left-hand side of this chart. In 2019, 5 new companies, Canaan, Definity, eBang, Liquid, and BitMEX, also rose to the status of unicorns, and we finished the year with 15 privately owned companies operating in blockchain with a value of $1 billion up, and you can see the relative valuations in the third column. This was driven primarily by blockchain companies based in the US and in China, although there are exceptions in Switzerland and Japan and Malta. We think that in 2020, we will see at least 5 new blockchain unicorns emerge. And as investors in this space, that is our focus. Our focus is not only being investors in existing unicorns, but making sure that we cast the net over the most attractive emerging blockchain companies, so we also get our capital into the largest proportion of the emerging unicorns. So we expect that we'll hear a lot more about blockchain unicorns in 2020. And as we say, we expect that we'll finish the year with more than 20 worldwide. And the last prediction is really a non-prediction. It's been true for at least 20 years that the world's highest performing asset class, or indeed one of the highest performing asset classes, has been early stage technology. On this chart, you can see the 25-year returns from various sources, including Cambridge Associates, for fixed income, the Barclays Government Bond Index, for the public equities market, the S&P 500 and NASDAQ Composite, all of which average 10 or 11% or less. And then you can see the US venture indices from Cambridge Associates, with the average being 24% net per year, but obviously the early stage index being much higher. Given that we live in a time of exceptional and unprecedented innovation, and given that new technologies such as blockchain technologies are just increasing the speed with which the world is changing and are unleashing enormous amounts of wealth creation and value creation, it's our expectation that the highest returns will still come from early stage in 2020, as they have in almost every year in the last couple of decades. And that really brings our predictions to a close. As early stage technology investors focused on blockchain, we believe that these predictions are meaningful and will be very beneficial to investors in this space. So in short, here are our 10 predictions. We'll revisit this at the end of 2021. We hope you found this of interest. For those of you who want to learn more about blockchain, please take a look at Blockchain Competitive Advantage, our best-selling book that is available on Amazon, Apple, Smashwords, Goodreads, and everywhere. And then for those of you who want to learn a little bit more about blockchain co-investors specifically, please visit blockchaincoinvestors.com or just reach out to myself or any other member of the team. We're always happy to talk to people about our investing strategies. And with that, I will bring this call to a close. Thank you.